Hi everyone. Today we are starting the new chapter of accountancy. This is the last chapter this year, and from this chapter you can expect a project question and a 6 mark question for examination, a compulsory 6 mark question, and one or two 3 marks or 4 marks questions and some 1 mark questions also. Okay, so let us start this chapter cash flow statement. So this statement is prepared to analyze the financial statements of company, especially the balance sheets. This is prepared to analyze the balance sheet of the company. So where we will study about the flow of cash and what is the result of the flow of cash at the end of a particular period of time. So for that purpose we prepare a cash flow statement. So in this chapter, in this today's section, we will be studying what is a cash flow statement, what are the importance or uses of cash flow statement, what are the limitations of cash flow statements, and the format of preparing cash flow statement. So let us start first the meaning of cash flow statement. A cash flow statement is a statement that shows the flow of cash and cash equivalent during a period under a report. That means it is a statement which shows the flow of cash and cash equivalent. What is flow of cash and cash equivalent? We will study what is cash equivalent later. Cash equivalent means simply we can say that it is the amounts which are equivalent to cash. Not like liquid cash, but it can be immediately converted into cash, so it can be treated as cash equivalents. We will see that which are the cash equivalents later. So here this statement studies about the flow of cash. Flow of cash means both inflow and outflow of cash. Various transactions are there which results in flow of cash. That means various situations are there which results the cash incoming or receipts of cash. So this is the statement which is prepared to analyze which are the various bases of receipts of cash or inflow of cash or transaction which creates an increase in cash, and outflow of cash means payments of cash or transactions which results decrease in cash. So this statement prepares to find out the flow of cash, that is inflow and outflow of cash in a business organization for a particular period of time. So we can say that a cash flow statement is prepared according to Accounting Standard 3 revised. Accounting Standard 3 says about preparation of cash flow statement. So the revised Accounting Standard 3 says about to prepare or how to prepare a cash flow statement. So there it says that cash flow statement is prepared under 3 heads. There are 3 heads in a cash flow statement. That means we will be preparing cash flow statements. Cash flow statement in indirect method. There are 2 methods, direct method and indirect method. Direct method is not there for CBSE syllabus. As per the CBSE syllabus, we have to study only the indirect method of preparing cash flow statement. So in the indirect method of preparing cash flow statement, flow of cash will be analyzed in 3 different heads. First one is cash flow from operating activities, then cash flow from investing activities, and cash flow from financing activities. These are the 3 different heads in finding out the cash flows. Okay. So what is cash flow from operating activities? All the inflow and outflow of cash with the result of business activities. Normal business activities can be called as cash flow from operating activities. Operating activities means normal business activities, buying and selling of goods or providing services. with that activities or from those activities how much cash inflow came or how much cash outflow happened. So that will be analyzed. And another heading is that cash flow from investing activities. We will be having investment in the sense investment of money in fixed assets. So due to investment activity or investing activity, how much flow of money happens? That means for a purchase of assets, suppose you can think that we are purchasing assets. What will happen to cash? Cash will go out. That means outflow of cash. For investing activity, that means for investing money into the asset or buying asset. So that is investing activity. Like that, if we sell an asset, we will get the money. So it is inflow of cash from investing activities. Like that, another activity is their financing activity. That means financing activity means finding out the money and investing that, or in order to invest the fund we have to raise the fund. So raising the money for business activity is called financing activities. For example, most important inflow of finance in this financing activity is that through issue of shares. Suppose we are issuing equity shares, then what we will get? We will get money, isn't it? So we will get money through issue of shares. That is an example of investing activity. Another one is cash flow from finance. Another one is if we redeem the debentures. If we redeem the debentures, cash goes out. We are paying the money to debenture holders. So these are the examples of flow of cash in investing activities, financing activities. That means in an organization, all the flow of cash happens in these three activities only. So we will be analyzing the flow of cash under these three different activities in cash flow statements. Now let us discuss what are the importance or uses of cash flow statements. Importance or uses of cash flow statement. Cash flow statement is very important because it helps for short-term planning. Short-term planning in the sense, in order to plan for a short period of time, say 1 year or 2 years, we can use the result of cash flow statement. Because this statement explains the flow, the reasons for the change in cash. So cash is a short-term asset or current asset. So since we are studying about the flow of cash, it will help us to study, or it will help us to plan for a short period of time. So it will help for short-term planning. Next, cash flow helps in assessing liquidity and solvency. It will help us to understand what is our liquidity position. We have studied in the last class about liquidity ratio and all. For example, what is the total amount of current assets, what is the total amount of current liabilities, and what changes happened to current liabilities and current assets. That helps to study the liquidity position of the business, as well as solvency, the strength to continue the business or capacity of business to repay its obligations can be understood. Another one is efficient cash management. It will help us to manage the cash efficiently. Helps us to manage the cash efficiently. So efficient cash management is possible. Another important thing is comparative study. So we can compare our business operations with another business operations or another business or the other companies with the help of the result obtained from cash flow statement. So cash flow statement helps us to compare our financial position with the other business organization also. Another thing is reasons for cash position. What are the reasons for having a particular position of cash? Why we have got this much cash in hand, or how we have got this much current assets, or which are the ways in which we are raising the money, and which are the ways through which cash are spent can be identified. So these reasons can be evaluated. And another one, we can evaluate management decisions, because all management decisions will affect the performance of the business, and these management decisions will result in the flow of cash, because management is taking decisions, and with the help of these decisions business organization raise and spend the cash. So with the analysis of flow of cash, we can analyze or evaluate that how the management is efficient and what is the effect of their managerial decisions. Then another one is dividend decision. Dividend decision means decision regarding the payment of dividend. Even if we have a lot of profits, we may not have liquid cash to pay the dividend. So if we know that how much cash is there with us, or how much cash may generate, by analyzing the present and previous condition, we can evaluate, or we can forecast that how much cash will generate in the coming year. So with that forecasting, what we can do, we can find out that how much cash will arise, and with the help of that evaluation we can declare the dividend. We can pay the dividend to shareholders. So these are the importance or uses of cash flow statements. Importance or uses of cash flow statements. Now let us discuss what are the limitations of cash flow statements. What are the limitations of cash flow statements? The most important drawback it suffers is it is ignoring all non-cash transactions. So performance of business not only affects through cash transactions, various non-cash transactions also will affect the performance of business organization. So if we have to analyze completely about a particular business, we should have an awareness of both cash and non-cash transactions, but here non-cash transactions are not shown. So that is one of the most important limitation. Another one is it is not suitable for an income statement. That means with the help of this cash flow statement, we cannot properly evaluate profit and loss account. With the help of this, we can evaluate only balance sheet. That's what we have told, that this is a tool for analyzing the balance sheet of the company and cannot be used to evaluate the income statements. And another important problem is that it is historical in nature. We have told that all the accounting information are historical in nature. That means we are analyzing what is happened in future. What is happened in past. So with the help of this, we cannot analyze that. We can only predict that what will happen in future, what may happen in future. Sometimes all the things which may happen in future will not be based on past experience. So this is historical nature, and with the help of that, there are limitations to evaluate things for the future. Then another one is assessment of liquidity. Assessment of liquidity. It assesses the liquidity position. That means how much cash we want, or how much cash we have already. That only we can analyze that. But with that cash, what can be done, or what can be the future scope for generating or maintaining the liquidity cannot be analyzed. So here with this statement, we can analyze only the liquidity position of the business. Okay, so these are the limitations of cash flow statement. Now let us see how to prepare a cash flow statement through indirect method. So format of cash flow statement under indirect method. So through direct method also we can prepare the cash flow statement, but as per syllabus we have to study only the method of preparation of cash flow statement through indirect method. So let us see that. So we have to write the heading cash flow statement of in bracket you can write indirect method for the year ended date, that for example 31st March 2020, some date can be mentioned as per the question. Then after that you can write as per accounting standard 3 revised. So this is the complete heading of cash flow statement. So after that we can give column headings, detailed amount, that means each item, individual items amount will be mentioned and total amount will be mentioned. Okay. So we have told that cash flow statement analyzes the cash position or flow of cash in 3 different activities. So we have to write all these activities under 3 different heads. So let us start with the first heading. We can give point A, cash flow from operating activities. That means all the cash generated from normal business activities or cash used in normal business activities. So in that, first of all, we will start the cash flow statement from the current year profit, current year's profit. So current year's profit we have to write here. That means net profit before tax and extraordinary items. Okay, so that will be the first item here. This can be calculated with the help of working note. That working note is here. We can see that. This is the working note for finding out net profit before tax and extraordinary items. Okay, so here net profit before tax and extraordinary item is the heading here, that we can find out with the help of that note. Okay, net profit before tax and extraordinary items. So let us see how to prepare that. We have given the heading, working note, net profit before tax and extraordinary item. We can make a statement. It has no particular format and all. So you can simply, if you want, you can follow the same format. But what is to be written inside should be same, or no item should be missed. Okay. So in this we will write closing balance as per statement of profit and loss. That means closing balance of profit this year ending. So you know that in company balance sheet you have studied that 2 columns will be there, amount for previous year and amount for current year. So in the current year balance, current year column profit will be mentioned, that is the closing balance. That includes previous year profit also, what is left over, that will be added to current year. So that's what closing balance of statement of profit we have to find out and write here. Okay, from that opening balance of profit you have to deduct. Opening balance you have to deduct. That means from the closing balance, if you deduct opening balance, you will get what you will get. You will get the total profit. That means the total amount of profit you will get here. We can add that here. So we will get net profit for the current year, that can be written down. That means after deducting opening balance from the closing balance of profit, we will get net profit for the current year. That will be net profit after tax and extraordinary items. So from that we have to deduct all the extraordinary items. That means all the items which we make as an appropriation of profit, like transfer to reserve, then proposed dividend, etc., etc. Okay, so let us write one by one. Transfer to general reserve, that will be the first item, that can be shown here, that will be added. So this amount we can show here outside, outer column, and after that we will write the amount here for general reserve. we will write one by one inner column and then we'll add and write outer column. Okay. So transfer to general reserve. Then after that dividend proposed for the previous year. This we will study. This we will discuss that how to treat proposed dividends in cash flow statements. That we will study at the end of this. Okay. So that will be written here. Dividend proposed means dividend is kept for paying to shareholders. Shareholders dividend not yet paid, but it is kept as a reserve. That should be written. That means it is kept as a reserve means it is already deducted from profit. So these deductions should be added to get net profit before tax and extraordinary items. Okay. Then next item, interim dividend paid during the year. This year if any interim dividend is paid means charged to profit and loss account. Then provision for tax made during the current year. This year if any provision for tax is made, that will be adjusted here. Then next, any other extraordinary items that is debited to profit and loss account. This extraordinary item also we will discuss later. Okay, so that will be mentioned here. And now we will deduct all extraordinary incomes. That means extraordinary items credited to statement of profit and loss. So extraordinary items, for example, if we have got any refund of tax or something is there, that can be deducted. So it will be deducted. Okay. So it can be shown here. So we have whatever we have added will be shown outer column. And now what is deducted also will be shown its total. If 2 or 3 items are there, its total will be shown outer column. And we'll add all these things. That means from this we have to deduct. This is the total amount. So from that total amount you have to deduct this one. Then we will get the total of profit. What is that? Total of net profit before income tax. Okay. So this is the profit. That means net profit before tax and extraordinary item. We have to this is the item for that. So net profit before income tax and extraordinary items. That means extraordinary items which are already deducted in the profit and loss account are now added back. Already deducted means while preparing profit and loss account we will deduct all the expenses. So we will get profit after extraordinary item, after deducting extraordinary items. In order to get profit before deducting extraordinary items, we have to add and deduct these all extraordinary items of expenses and incomes. So this profit will be shown as the first item in cash flow statement. Okay, so that amount can be marked here. The next item, all non-cash, non-operating expenses will be added. Non-cash, non-operating expenses. See why this method is called indirect method. Its answer you will get here. Because we are not directly taking any cash items or non-cash items here to add with operating activities. Instead of directly adding cash and non-cash and cash incomes or cash inflow and outflow, we are taking indirectly. Okay, that means from the profit, all the non-cash items will be added back. So the net indirectly we will find out the cash flow. Okay, that is the specialty of the method. So first important non-cash expense is depreciation. So depreciation we are not giving in cash, so that can be added. And another one is like depreciation, we know that amortization is there for intangible assets. That means decrease in the value of intangible assets, that will be added. Then Next we can see interest on bank overdraft, cash credit. This is not non-cash expenses, but it is non-operating expenses. Here see non-cash, non-operating expenses we have to take. So this is interest on overdraft or cash credit is not at all an operating expense. It is not directly related to business transactions. These are indirectly related to that. So non-operating expenses. That also taken. And now see interest on short-term loans and borrowings. Interest paid for the short-term borrowings or loans. Short-term borrowings or loans or long-term borrowings. That means interest paid. All the interest paid will be taken for financing activity. That means overdraft is a financing activity. This loan also financing activity. All the interest other than operating interest. Then loss on sale of fixed assets. This is also a non-operating expense. We have sold the asset and that sale was at a loss. How much is the loss? That will be written off. It will be added back. Then increase in provision for doubtful debts. If there is an increase in the doubtful debts created, for example, last year provision for doubtful debts was 5,000. Now it became 8,000. Now this year created. So how much is the increase? 3,000 is the increase. That difference we have to take here. Then another item, preliminary expenses written off, discount on issue of shares or debentures written off, etc. will be taken. So after adding all these non-operating expenses, the next item is non-operating incomes. All the incomes other than business activities will be taken here. So this first item we can write interest income, interest received from deposit or interest received from investment. Suppose we have invested money into the debenture of some other companies, so they have given interest. Or if we have deposited some money as an investment or invested money in bank deposits, long-term bank deposits or something, that interest also can be. So all the items deduction will be, here we are showing in brackets in order to understand that these items are to deduct. Okay, the amount in bracket shows items to be deducted. Then dividend income. Dividend income is also not related to business activity. That is the income for investment of money in shares. So that is non-operating income that is deducted. And another one, rental income. Suppose if we have a rented property, building or something, and if we get income from that, that also can be deducted. Okay, 3 items we have shown so far to deduct. Next, gain or profit on sale of investment. So we have told loss on sale of assets or loss on sale of investment, whatever it is, it can be added as non-operating expense. So like that, if profit is there, it is non-operating income. So that can be deducted. Okay. Then next item, decrease in provision for doubtful debts. Decrease in provision for doubtful debts. So provision for doubtful debts, if increases, expenses will be added. And provision for doubtful debts, if decreases, expense decrease. So expense decrease is equal to income increase. So it can be deducted. Then the result we will get operating profit. Operating profit is the result. That operating profit is before changes in working capital. Okay. So we can mention here operating profit before working capital changes. So we have added all these expenses to profit and deducted all these non-operating incomes and got what? Operating profit before working capital changes. Okay. The next item, now we have to find out operating profit after changes in working capital. So working capital, we know that current assets and current liabilities. Net working capital concept says that it is the difference between current assets and current liabilities. So in order to find the operating profit after working capital changes, we have to add back all the decrease in current assets and increase in current liabilities. Decrease in current assets and increase in current liabilities. So these are the items. Decrease in current assets, of course, you know, inventories, trade receivables, that is debtors of business, this bills pay receivable, then accrued income, then prepaid expenses, then these are the decrease in current assets, decrease in inventory, trade receivables, accrued income, prepaid expenses, like that. So decrease in current assets, all the current assets except cash and cash equivalent. That cash and cash equivalent we will discuss later. Except cash, all the current assets, its decrease should be shown here. How much is the amount of decrease? You have to see that previous year amount how much, current year amount how much. So current year if decreases, that difference you can take here. That's all. So we can write the amount here. In amount column we can mark the amount, and after that we know current liabilities increase in current liabilities. So here we have to see in liabilities one by one and see that which liability is increasing. So first of all you can see trade payables, that is bills payable and creditors, that also will be added. That means all the decrease in current asset and increase in current liabilities will be added. Increasing outstanding expenses, then increase in advance income received in advance is a liability. If that liability increases, it will be shown. So these are also can be written here. Then after that, from that we will deduct all the increase in current assets and decrease in current liability. That means whatever is added, its opposite will be deducted. Current assets increase will deduct and current liability decrease will also deduct. Okay, so let us see one by one. Increase in inventories, increase in trade receivables, increase in debtors and bills receivable, increase in accrued income, increase in prepaid expenses, then increase in trade payables, decrease in outstanding expenses, like that, decrease in advance income received in advance is liability. If liability decreases, that will be shown here, and we will mark the amount in brackets here. Amount will be shown in brackets. So now we have added changes in working capital with the operating profit before working capital changes. What will be the result? Here we will write the amount down, and against that we can write cash generated from operations, or you can write cash generated from operating activities. Okay, then from this amount we have not yet deducted the income tax. So income tax paid, we have to find out the profit before tax and extraordinary items. So we have found out profit before extraordinary items. Now we have to find out net profit before extraordinary item and tax. So in order to find out that, we have to deduct tax refund. That means how much tax is paid. Out of that, if any refund is there, any amount is there for us to get back, that can be deducted. So that amount is deducted, and now we are getting here the profit. Okay, profit is cash flow from operating activities. This is the amount of cash flow from operating activities that can be shown outer column. See, if this is a positive amount, plus amount, it is cash received from operating activities or cash flow from operating activities, and if it is a negative figure or amount, if you get in bracket, it will be a negative one. That means the amount deducted are more. So then it will be called as cash flow used in or cash used in operating activities. So first part is over. Now let us see the next part, second part, what it is: cash flow from investing activities. Cash flow from investing activities. In that investing activities, all the cash flows or inflow and outflow related to purchase and sale of assets and investment of assets, sale of investment of assets will be shown here. Okay, so let us see one by one. Proceeds from sale of assets. So all the inflow of cash will be added. Through the sale of asset we will be getting cash. So cash proceeds from sale of asset will be shown. Next, sale of investment. See, except current investment. Current investment will be shown in working capital changes, and marketable securities also will be shown as cash equivalent. So those items should be avoided, except that all the investments should be taken here. That means all the long-term investments. Next, proceeds from sale of intangible assets. If we sold any intangible assets like patent right, copyright, etc., that amount can be mentioned. Okay. Then next, we can say interest and dividend received for financing companies only. That means interest received for non-financing companies. Financing company, if get interest, it will be interest on loan. That is their operating activity. Why? Financing activities are, financing companies are undertaken for doing financial services like accepting deposit or lending loan, all those things. So since it is their regular activity, it should be shown in the operating activity only, or it is their operating expense. So then we cannot show that here. So except financing companies, if any other company receives any dividend from their investment, that can be shown here. Then rent received. Rent received, we have told that it is income received from letting out of our property, building, etc. So this is investment activity. And payment of for purchase of fixed assets. So these are the assets which we have discussed are the inflow of cash. Now came from one outflow of cash, that is purchase of fixed assets. So if we purchase the fixed asset, we have to spend money, cash out goes. Then like that, next one is payment for purchase of investments other than marketable securities. We have told marketable securities we will take in another head. So if any other investment, long-term investment is sold, that will be written here. Purchased means if we spend money for purchase, that money will be written here. Then another one is payment for purchase of intangible assets. If we have purchased any intangible assets like goodwill, patents, copyright, and anything, that amount can be shown here. Okay. Next item, extraordinary items. That is, extraordinary items we will discuss later. Here extraordinary items related to financing activity will be mentioned. For example, insurance claim on machinery, or machinery against accident or any other fire or anything, something. If we have got damage with our machinery or something, any assets, that will be an extraordinary items. Okay, that loss will be mentioned here. Okay, now we will have to add all these items, then we will get cash flow from investing activities. Cash flow from investing activities. So two activities are over. Operating and investing activities are over. Now let us discuss the third activity, what it is, cash flow from financing activities. So here we will be discussing, these are the activity related to finance. So all the financial instruments, purchase or sale of financial instruments will be mentioned. Like that, all the income from financial instruments or all the expenses related to financial instruments will be mentioned here. Okay. So first we can write proceeds from issue of shares and debentures. If we issue shares or debentures, we will get finance, money we will get, that can be mentioned. In this year, if we sold any shares or issued any shares or debentures and receives money, that money can be mentioned here. Then proceeds from other long-term borrowings. If we have received any other long-term borrowings, if we purchase, its proceedings or if its money amount can be mentioned. Next, increase or decrease in bank overdraft and cash credit. Bank overdraft or cash credit. For example, if our bank overdraft normally will be shown under the head current liabilities, but here for cash flow statements preparation, we will not mention bank overdraft as a current liability. We will be mentioning it as a financial cost. Okay, so if bank overdraft or its interest on bank overdraft increases, it will be called interest payment is an financial expense, financial activity expense, so that will be mentioned here. Then payment of final dividend. If we have paid any dividend, that will be mentioned. Okay. So what is the next? Net effect. Next we can, another one we can mention, payment for interim dividend. Payment for interim dividend can be mentioned. These amounts, all the payments, payment of final dividend, interim dividend, all will come in bracket, the amount, because these are to be deducted. So that can be mentioned under inside a bracket. Then next item, payment of interest on debenture or interest on loan, including short-term or long-term loans. All the loans, interest paid on all the different types of loans can be mentioned. Then let us see next one, repayment of loans. If we have paid back any loan this year, that can be mentioned. Then redemption of debentures, preference shares, etc. will be mentioned. Next item, payment of share issue expenses. That means we have studied in the previous classes about share issue expenses. At the time of issue of debentures or shares, if we paid any commission or brokerage for underwriting agencies or any other expenses related to share issue can be mentioned. Then buyback of shares. If we have spent money for buying back our own shares from the public, that is buyback of shares, that money can be mentioned. So after deducting all, we will get, this can be deducted and we will get at last cash flow from or used in financing activities. Cash flow from financing activities we will get. Okay, so this is the net effect of all financing activities. You can see here we have got this much as the financing activities, cash received or generated, or if we are getting this amount in minus, we will be using it as cash used in financing activities. So we will take that into the outer column, and now we have got the amount for all the three different activities. Here also we have to mention that in the outer column. So here First cash flow from operating activities, then investing activities. Here we have not mentioned this, also should be shown outer column. So here two amounts and here three amounts. All the three amounts should be added and written down, and that is cash or cash equivalent. That means net increase or decrease in cash and cash equivalent. That means net increase. That means this year whether cash or cash equivalent, whether it increased or decreased. That will be the result here. If it is increased, it will be without bracket. That means it will be a positive figure, plus figure. Otherwise, it will be a minus figure. Then it will be, if it is a minus figure, it will be net decrease in cash and cash equivalent. Otherwise, if it is a positive figure, plus figure, we will write net increase in cash and cash equivalent. Then to this, we have to add back all the opening balance of cash and cash equivalent. See, opening balance of cash and cash equivalent we have to add now. Add cash and cash equivalent in the beginning of the year. What are the cash and cash equivalent? Cash items are cash in hand, then cash at bank, then after that short-term deposits. This is cash equivalent, not cash, it is cash equivalent. At any time it can be converted into cash. Then current investments, otherwise called marketable investments. Okay, so current investments, then marketable securities, investment in marketable securities. These are examples of, the last three items are examples of cash equivalents. Okay, so we are adding all those items, added, and we'll write the total amount outer column. Okay, then this will be added and will be written here down. That means net increase and decrease in cash and cash equivalent plus opening balance of cash and cash equivalent will be added and written here. Then we'll write the next heading, cash and cash equivalent at the end of the year. That also same way, the closing balance of cash as well as cash equivalent will be mentioned. All the items will be mentioned for the closing balance. And we will mention its amount also inside. And the final result will be here. The speciality of this is that, so you can see here point E, point E. D and E added together, point D and E added together and got the answer here. And this answer should be equal to the total of all the current assets and cash and cash equivalent. Cash and cash equivalent on closing balance should be equal to cash and cash equivalent at the opening balance and net increase and decrease in cash and cash equivalent. Okay, that means here this amount you are seeing here, this amount should be equal to the last amount. If it is equal, your problem is correct. Okay, now we have to see two short notes. First one is, what is extraordinary items? What are the different extraordinary items? Extraordinary items means all the items which are not an ordinary item for the business organization. Rarely happens. Okay. For example, this can be divided into extraordinary items of three different activities. Extraordinary item for the operating activity is, example for that is compensation paid to employees under voluntary retirement scheme. You may have heard about VRS. If an employee takes VRS, that means willingly employee is taking retirement. So at that time we have to pay compensation to them. So that will be an extraordinary item for operating activities. Like that, extraordinary item for investing activity is claim against damage of fixed assets. We have told that if in insurance premium is there. So insurance claim we can make if the asset gets damaged. That amount can be mentioned. Like that in financing activity we have payment of buyback shares. That is an extraordinary item, not regular activity. Okay. So these are the examples of extraordinary items. And let us see the most important part of treatment of an item is treatment of proposed dividend. See, proposed dividend will be mentioned in the opening balance, that means last year amount and current year amount in the balance sheet. So in this cash flow statement, we will not take current year balances of proposed dividend. We will take only the previous year balance. Proposed dividend means the amount is decided to give, or dividend is decided to give the shareholders. Okay, that amount is called proposed dividend. And the treatment here is we have to take the previous year amount, and that amount only will be mentioned. What is the reason for that? That is given here. Proposed dividend for the previous year, that is, and if it is not stated otherwise, will be assumed to be approved by the shareholders in the annual general body meeting. That means proposed dividend means dividend is decided in the annual general body meeting to pay to shareholders. Okay, and that amount after deciding, it will be shown in the profit and loss account of the current year, or profit and loss account of that year. And that if dividend is decided to give, that will be given in the next year. So that's why when we are preparing cash flow statement for current year, proposed dividend for the previous year will be treated as paid during the current year. So that's why it is an outflow of cash in financing activity. What dividend proposed for the last year should be paid now. So it's a financing activity. Dividend is paying for shares. So shares comes in financing activity. So it should be an outflow of cash in financing activity because we are paying the money out. And this amount of dividend will also be added to net profit because it will be deducted from net profit. Profit only are giving. So it will be added to net profit as per the statement of profit and loss at the time of calculating net profit before interest, tax and extraordinary item. We have made the working note. In that working note, you may have seen that dividend is mentioned. Okay, so that dividend you can see here. Dividend proposed for the previous year is mentioned. So that will be added there. And in financing activity also you can see payment of final dividend including this is proposed dividend also. Okay, so that is proposed dividend paid is called the final dividend paid. Interim dividend is different. Interim dividend means in a year twice, or in between a year some dividend if pays, that is interim dividend. Okay, otherwise it is called the final dividend. Proposed dividend is final dividend proposed. Okay, so it should be added to financing activity. It should be deducted as an expense in financing activity and should be added to profit or added while calculating profit. Then proposed dividend for the current year will not have any effect in cash flow statement. Why? Because it is not proposed to pay, or it is not decided to pay. So since it is not yet approved, we cannot show that dividend in cash flow statement. So current year dividend proposed should not be shown in the cash flow statement. So these are the topics for today's section, and tomorrow we will be discussing numerical problems regarding cash flow statement. We will be studying how to solve a question related to cash flow statement. I hope you understood the format of cash flow statement, its uses and importance, and the treatment of proposed dividend. And if you have any doubt, don't hesitate to communicate or ask those doubts to me. Okay, thank you very much.